In North Redondo, right now, townhomes are selling for significantly more than single-family homes. Meanwhile, in South Redondo, despite critically low inventory, the median price for a single-family home just dropped by double digits, while days on market tripled. If you're looking at the headlines for Redondo Beach or Los Angeles County, you are looking at a mirage. The reality of selling your home in December 2025 isn't about citywide averages. It is about which side of the split reality you live on. Picture driving down Artesia Boulevard versus cruising the avenues in South Redondo. In one neighborhood, we have a velocity engine where homes are vanishing in 8 days because they are the only option left for families. In the other, we have a coastal correction where buyers are taking their time, inspecting every pipe, and negotiating hard. We need to stop treating these as the same market. For the rest of this breakdown, I'm going to refer to these as the velocity zone in the north and the reset zone in the south. Selling into this market means navigating a specific tension. Are you hitting the affordability wall where buyers simply cannot afford a penny more? Or are you in the correction zone where the pandemic premium has finally evaporated? And that's before we even talk about the insurance crisis or the massive zoning ruling that just stripped the city of its planning power. By the end of this video, you will know exactly which lane your property is in and whether it makes more sense to sell within the next 6 to 12 months or hold on for the 2026 spring market. If you're thinking about selling within the next 12 months, you're not just timing interest rates. You are timing a massive shift in local control. We are sitting in a window where inventory is incredibly tight, creating a floor for your equity, but we are also facing a builder's remedy situation that could fundamentally change what can be built right next to you. The wild card here isn't just the Federal Reserve anymore. It's whether your buyer can actually get property insurance to close the deal and whether the zoning on your street is about to change. The choice isn't just stay or go, it's about choosing between the certainty of today's scarcity and the unknown of tomorrow's regulatory landscape. Let's look at the foundation for your leverage: scarcity. Across the board, we are seeing months of supply ranging from just over 1 month to over 3 months. In plain English, that means that if no new homes came on the market, everything currently for sale would be sold out in weeks. Technically, anything under 3 months is an aggressive seller's market. But here's the catch: usually when supply is this low, prices skyrocket. Right now, they aren't. That disconnect, low supply but softening prices, is the most important signal for your equity. It means buyers want to buy, but they have hit a hard financial ceiling. Homeowners just like you are using my Redondo Beach equity snapshot to quietly track their position while they figure out their timing. It's a monthly digest that helps you monitor your estimated equity and market temperature right from your inbox. Obviously, no algorithm can see your new kitchen or know if your roof needs work. That level of precision requires a walkthrough. But this tool gives you the perfect baseline to watch your wealth grow until you're ready for that one-on-one strategy call. You can grab that snapshot using the link in the description. I'm Mr. Hernandez, your real estate advisor here in Redondo Beach. My job isn't to sell you a house, it's to build a flight plan for your equity. Too many owners make six-figure decisions based on what their neighbor sold for last year, rather than what the data says is happening right now. Today, I'm going to map out where the speed and bidding power live so that you don't underprice, where affordability is capping prices so that you don't overlist, and how the new conforming loan limits and insurance chaos will reshape your options in 2026. Let's start with the most aggressive lane in the city right now, North Redondo, specifically the 90278 zip code. This is where we are seeing that velocity engine I mentioned, but with a massive caveat. In November 2025, the median price for a single family home in 90278 dropped to $1,325,000. That is down roughly 12.5% from last month. But here's the twist: these homes are selling in a median of just 8 days. In plain English, that means we have hit the affordability wall. Buyers in North Redondo are typically dual income professionals. At current rates, their monthly payment tolerance caps out at right around that $1.3 million mark. When a home is priced there, it evaporates in a week. The demand is voracious, but only at the right price. If you're an owner in North Redondo with a standard single-family home, this is your reality check. You cannot push pricing aggressively right now. The drop in median price proves that buyers are tapping out. However, if you price at that wall right around 1.3 million, you are likely to see immediate activity and multiple offers because you are the only product they can afford. If you're buying in North Redondo, speed is your only leverage. 8 days on market means you do not have the time to think about it over the weekend. You need to be fully underwritten before you even step into the open house. Now let's look at the anomaly. In that same zip code, 90278, the median price for condos and townhomes actually jumped nearly 20% to roughly $1,575,000. Yes, you heard that right. Townhomes are selling for $250,000 more than single-family homes in the same neighborhood. What this really means is that the tall and skinny detached townhomes, those big 2,000 square foot units, are the premium product right now. Families are choosing square footage and modern amenities over the smaller, older single-family lots. They are buying for utility. If you own a townhome in North Redondo, you're holding the winning hand this month. You have the square footage families are desperate for, and they are willing to pay a premium over the smaller houses nearby. You have more pricing power than the single-family homeowners right now. If you're buying a townhome here, realize that you're competing for the most efficient housing stock in the city. Don't expect a discount just because it's a condo on paper. Now let's move to the coast. South Redondo, 90277. This is what I'm calling the reset zone. The median price for single-family homes here dropped roughly 13% to $1,772,000. But unlike the north, speed has slowed down significantly. Days on market tripled to 24 days. In plain English, the COVID premium is officially gone. A jump from single-digit days to 24 days doesn't mean the market is crashing. It just means that buyers are doing their homework. They are inspecting foundations, checking sewer lines, and researching insurance costs. They are no longer panic buying. If you're an owner in South Redondo, the days of putting a sign in the yard and getting 10 offers over list price are past. With the sell to list ratio dipping to just under 100%, you need to prepare the home. Buyers paying nearly $2 million at 6% rates are demanding near perfection. If you have deferred maintenance, you will be punished on price and time. If you're buying in South Redondo, this is your moment of leverage. 24 days on market is an eternity in this town. You have time to negotiate repairs, ask for credits, and ensure the property is insurable. Use that time. Now let's zoom out to the economic engine driving all of this. We are currently navigating a bit of a data void due to the government shutdown in October, which means the Federal Reserve is flying partially blind. However, we know that mortgage rates have finally offered some relief, dropping to around 6.19% as of early December 2025. We also saw a warning sign in the job market, with the ADP report showing a loss of 32,000 private sector jobs. What this really means for you is that the economy is cooling, which brings rates down, but it also makes buyers nervous about their employment. It's a double-edged sword. But there is a massive silver lining for 2026. The conforming loan limits for LA County are going up to roughly $1,250,000 next year. If you're an owner specifically in that $1.3 to $1.6 million range, this is huge. It means your buyers can now use cheaper government-backed loans with lower rates instead of the harder-to-get jumbo loans. This injects a massive amount of liquidity directly into the North Redondo price point. If you're buying, this change could save you hundreds of thousands of dollars and make qualifying significantly easier starting January. If you're finding value in this deep dive, if you prefer this kind of strategic breakdown over the usual market is great fluff, take a second to subscribe. I track these numbers every single month so that you don't have to guess what's happening to your net worth. Now we need to talk about the structural earthquake that just hit Redondo Beach. In October, the court effectively decertified the city's housing element. In plain English, this means the city's plan to meet the state housing goals was ruled invalid. Because of this, Redondo Beach is now exposed to the builder's remedy. This allows developers to bypass local zoning rules, height limits, density caps, setbacks, if they include affordable housing in their projects. What this really means for you if you sell is that the low density protection your property value relies on is currently suspended. If you're located near a commercial strip or a large lot like the AES plant, buyers can no longer assume those views or traffic levels are safe. If you're an owner near a commercial zone, you need to be aware that the zoning map is no longer a safety net. A developer like one controlling the AES site now has the leverage to propose density that was previously impossible. This is an objection you have to be ready to handle in negotiations. Despite the headwinds, development isn't stopping. The South Bay Galleria Phase 2 has been approved, bringing 350 new residential units and revitalizing that court. And the Legato project is actively leasing, setting a new rental benchmark with units going for $4,000 to over $9,000 $9,000 a month. This proves that the demand for high quality living in Redondo Beach is real, even at premium prices. The fundamental desire to live here hasn't changed, only the mechanics of how we pay for it. On top of the zoning chaos, we have the silent deal killer, insurance. The California FAIR plan has exploded in size because major carriers have stopped writing new policies. I'm seeing deals delayed or canceled because buyers get a quote for $8,000 a year for a fire policy and the math simply stops working. If you're an owner, you must be proactive. Disclose your current insurance status. If you have a policy that can be transferred or if you know the property is insurable, say it up front. It is a competitive advantage. If you're buying, do not write an offer without an insurance contingency. You need to know that you can actually bind coverage before you put your deposit at risk. Here's the central conflict you're facing: scarcity versus friction. We have scarcity because no one wants to sell and give up their 3% mortgage, keeping inventory historically low. But we have friction from 6% rates, an insurance crisis, and a zoning legal battle. Doing nothing is still a decision. If you hold, you are betting that rates will drop enough to spike prices up again in 2026 without unlocking so much inventory that it floods the market. You are also betting that the insurance market stabilizes. So how do you play your cards in this market? If you sell in the next 6 to 12 months, you're selling into a window of low competition but high buyer sensitivity. You avoid the risk of a potential flood of inventory if rates drop into the fives, and you lock in your equity before any major zoning changes physically break ground. My goal is to make sure future you is glad you handled this the way you did. You don't have to guess on pricing, and you certainly shouldn't be guessing on the insurance or zoning risks. If you want a clear flight plan for your specific home, one that looks at your neighborhood's velocity, your insurance profile, and your competition, let's talk. You can schedule a one-on-one strategy session or just download that equity snapshot using the link below. No pressure to list, just the data you need to navigate a market that is changing faster than the headlines can keep up. I'm Hernandez, and I'll see you in the next one.